result briefing is part of Bursa Malaysia's Investor Relations and Public Relations project for selected listed companies. The IR and PR project is aimed to improve the visibility and accessibility of participating PLCs via more active IR engagement with the investment community. For the first phase of the project, Image Dual Communications has been appointed as a third-party IR company to train and educate participating PLCs to conduct effective IR engagement. The selected companies for this program are PLCs that are less accessible to analysts and investors, but highly in demand based on the feedback received from the investment community. We wish to thank HPMT for participating in this project. The recording of the investor briefing and presentation slides will be made available for all on Bursa Malaysia Institutional Insights portal after the event. Today with us in the call, we have Mr. Tan Kim Chuan, the ED and CFO of HPMT, and Mr. Luciano Pezzota, the Sales Director for HPMT Industries. Without further ado, may I now invite Mr. Tan to run through the presentation decks, followed by the Q&A session. Over to you, Mr. Tan.
Okay. Thanks, Chandra. Everyone can hear me clearly?
Yeah.
Okay, allow me to share the screen. Can everyone see the screen?
Yeah, I can.
Okay, thank you. Yeah, welcome everyone. So thanks, Sandra, again. So this is our full year final quarter result, and we will have go through this short briefing and followed by Q&A. I'll go through this quickly. Okay. I think everyone will know HPMT actually embarked on the three main segments. One is the manufacturing of cutting tools, and we also doing trading of related equipment and tools, and as well as PVD coating. And our market is worldwide, spread into more than 30 countries. Our business model, we sell through mainly distributor, and about 10% or 11% per se for this current status. We sell direct to the end user. And as you can see, our product, we can broadly categorize into standard tools, special tools. And our trading item, we have machine tools and also other tooling and equipment. And we also provide coating services to external party. Few main segments that we are involved in: equipment and die, semiconductor, automotive, aerospace, medical, consumable, electronics. And of course, I think this is the latest markets research that I would like to share with everyone. As everyone knows, 2020, the world economy was affected by the COVID. As you can see, we actually it's the same for cutting tool industry. We can see there's a 21% drop in terms of cutting tools industry worldwide. And followed by a strong recovery in 21, actually is a 12.5% recover or rebound in the year of 21. And then according to this market research, the coming, this growth for this industry will be normalized, like in 2022 and forward, we will go back to the normal of 5% or 5+% kind of a normal growth for cutting tools industry. Highlighted are the industry that the main consumer country, as you can see on top is the China, followed by US, Germany, Japan, Korea, India, France, and the rest of the company. And those highlighted in red color are those companies that are those countries that we have our presence currently. And these are the traditionally highest consumptions by industry. Aerospace ranked #1, followed by automotive and others, as you can see here. This is our 12-month trailing growth, order received and our invoice. As you can see, we experienced a strong growth in 2021. And as you can see in black color chart, this is our sales order intake. And towards end of the year, actually, you can see the demands become stable at this level. And the sales actually go in tandem with the order received. For manufacturing output, we experienced a drop like many industry during this COVID period. We have a drop from our total output of 1.2 million to 933,000 pieces. And this year, actually, we rebound almost to the same level as pre-COVID level, 1.1 million. In terms of revenue, 2021, we registered a 26% growth compared with 2020, growth from 71.8 million to 90.5 million, which is 26% growth. And then in terms of GP, we recorded 33% growth from 30.2 million to 40.3 million. In terms of PATAMI, we have registered a 66.3% growth last year from 8.3 million to 13.8 million. And because of the increase in the turnover, our expenses ratio also dropped from 30.5 in 19 to 24.9% in 2021. In terms of segments performance, as you can see, more or less the same compared with previous year. It's only slightly increased in terms of manufacturing segment, 91.6%. Revenue come from manufacturing segment, followed by trading segment of 5.6% and coating segment of 2.8%. Across the segment, actually you can see we have experienced growth across the segment. Manufacturing 28.2% growth, trading 1.1% growth, and coating segment we have 15.6% growth. As an average, we have a 26% growth in terms of revenue. In terms of country, Italy last year actually grows the highest. We recorded 73.7% growth. We grew from 9.4 million in the previous year to 16.3 million last year. And Malaysia market, we grew about 10%. Become 16.26 million turnover from Malaysia market. And German market, we grew 23%, Czech Republic 21%, and Japan market, we grew 14.4%. This is some summary for the last year performance. Revenue 26% growth, GP 33 and PBT 85. And today, our dividend payout ratio is 41.5%. As compared with year on year, you can see we have a 20% growth for revenue compared with last year, same quarter, 18.1, current quarter, 21.8. And in terms of GP, we have 8% growth from last year 8.1 to current year 8.7. In terms of PATAMI, actually we experienced some drop, 8.8% drop compared with last year. One of the reasons is because last year, if compared fourth quarter, actually we still enjoy a wage subsidy of 300 over 1,000 from government. As a whole, last year, full year, we received close to 1 million wage subsidy from government. This is some snapshot of our balance sheet. We are at the net cash position. Cash and bank balances, we have 57.8 million and net asset 40 cents. In terms of trade payable turnover, debtors turnover, I think more or less the same. In fact, we have some improvement in terms of trade payable turnover. We maintain the same for trade debtors turnover, and we have some small improvement in terms of inventory turnover from 235 to 213 days. Gearing ratio remained very low, 0.18%. This year also, we paid the highest dividends compared with the past 2 years. We paid 4 rounds this financial year. The dividend payout grew from 1.25 cents to current year 1.75 cents. The total payout is 41.5%. HPMT, we always share with our investor. We have a good track record. We have a more than 20 years manufacturing experience. And on top of that, also, we have more than 40 years kind of trading or business experience in the cutting tool industry. And today we sell to more than 30 countries, well spread. And we have a lot of this SKU, strong margin, as well as we have our in-house expertise and skilled staff that can support us for future growth. Moving forward, so I think as everyone know, I think we hold on some of the capex because of the COVID, and we think market will due to this reopen of our economy will slowly recover. So we start to invest also in our capex capacity. We plan to bring in 4 units of CNC machine and also 4 units of filtration system to support our future growth. And also we try to bring in this financial year another coating machine for our coating services. And we think the efficiency improvement is very important and automation is very important under this environment. We embark on the new ERP rollout. In fact, we go live this year for the new cloud-based ERP. And also we are trying to embark on some initiative of automation. In terms of product and marketing development, we just launched our EC line last year, towards end of last year, to support certain market that they need some more competitive kind of price sensitive kind of product. And as well as we plan to roll out another series of DRS and also Nitico 30 end mill, probably in the second quarter of this year. Also towards the end of last year or beginning of this year, we already officially launched our new catalog. As you can see this catalog also in our webpage. And in terms of marketing activity, also we will resume some of the physical exhibition this year. In fact, we just have our physical exhibition in Taiwan, Team Top. This is the first exhibition since totally locked down after COVID's time. So some of the stock information. So I leave the balance of the time for Q&A so that we can have some exchange in idea. And if you have any other question in terms of numbers and other things, feel free to ask. Over to you, Sandra.
Okay, thank you, Mr. Tan.
Yeah.
May we now open the floor for Q&A session. You can either ask your questions verbally or have your questions typed out in the chat box. Thank you.
Hi, Casey, Edwin here.
Hi,
thanks for the briefing.
Thanks for
just
coming.
3 questions from me. On the 4th quarter, GP margins looks quite weak. Can you elaborate on this? And then the first 2 months of 2022, how are your order trends looking, especially on the EU side, especially since this Russia-Ukraine crisis? Is there going to be any spillover impact onto your order trends from EU especially? And also, finally, can you give us a revenue guidance for this year that you are targeting?
Okay.
Thanks.
I think the 4th quarter we experienced some drop. I think obviously we need as many business. I think we need some consolidation. And then I just mentioned another reason for that is because we have a slightly early cutoff for final quarter due to the ERP project. So we have some early cutoff in order to prepare for the data migration. So I think everyone knows also in terms of as an export country, so we enjoy this exchange rate throughout the more or less the majority of the time in 2021. So as you can see, from compare with third quarter and fourth quarter, the exchange rate in terms of euro actually is coming down a bit. So that will also affect a little bit. But what I'm trying to highlight is like as a whole, actually, our GP margin still maintained as 40%, which is we will consider it's a healthy level or even a high level at this point of time. So of course, we achieve extraordinary kind of GP level in quarter 3 due to high output and also favorable exchange rate in that particular quarter. So we believe we will still maintain a good or high level kind of GP margin moving forward. So this is a bit summary for the final quarter versus third quarter result. And as for your second question, actually order coming in still stable. And as you can see in my slide just now I share the market slide. As you can see here, everyone knows we are just a small player in the cutting tool world. Okay, so we expect we will outperform the market. In 2020, when the market dropped about 21%, actually we dropped lesser, much lesser compared with 21%. It's almost half of it. And in the year of 21, actually market registered 12% growth. Actually, we registered a double-digit 26% growth. So this is kind of things that we think we can outperform the market. So that's why when this year, when we expect the market growth of this kind of back to the normal kind of growth rate, we expect we can do better than the market. But of course, you mentioned about the current development in the Russia and things like that. That of course will give us a lot of kind of uncertainty. But having said that, we don't see any interruption in terms of incoming order from that part of the world. Luciano, you have something to add?
Yeah, maybe I can add something on this one. So our exposure to Russia and Ukraine is quite limited. So we don't expect a significant impact. Also because what we see is that the defense and aerospace eventually sectors are instead getting from the situation a significant boost. Our exposure to those sectors is also limited, so we don't expect really a very significant traction from those sectors, but somehow they should be able to offset the direct impact in Russia and Ukraine. Eventually, the impact as on the overall economy, because our industry is closely linked to the overall economy, is that if these tensions over energy, oil, gas in Europe is going to increase inflation and is going to increase, it's going to push the central banks to increase their interest rates and then cooling down a bit the economy. That is eventually how the current situation can affect our business as the general economy.
Thank you.
Hi, Maria. Sorry.
Yeah, just one more. The last question, any revenue guidance that you can give us?
Now I say, I think we believe we can outperform the market with the continued opening of economic or border from the many countries. We believe the economy will go back to the normal. So this is the things that we are optimistic on the year to come, or 2022. And on top of that, actually, as you can see, we also embark on the capacity expansion already. So we believe actually we can tap on the future market.
Okay, thank you.
Yeah, thank you.
Hi, we have a question from Ronnie.
Yes.
How much exposure does HPMT has in terms of the semiconductor and healthcare sector?
Traditionally, we are strong in mold and die in electronic, but I think we cannot tell precisely the end user market because we sell more than 90% through distributor. But I think traditionally we are strong in these two areas, mold and die and electronic. And we sell a little bit in terms of medical. Luciano, you want to add a little bit on the market segment?
Yeah, as you said, we don't really have precise data, but definitely electronics in Asia is one of the driving industries that we serve through our distribution network. Healthcare is one of the, for us, one of the niche segments that we're serving. We're placing a growing focus also because the healthcare sector requires very high value tools that are some of our development focus moving forward. Everybody knows the growing importance that the healthcare industry is covering across the globe. And so at the moment, the exposure is still limited, but we expect this exposure to grow over time.
Thank you. We have another question from Ronnie. What is the capex that you'll be expecting for FY 2022?
I think at this point of time, let me go back to the slide. Okay. So as you can see, this is the things that we plan. In fact, the machine is we expect the machine coming in, this 4 CNC machine probably in the second quarter. And the final coating machine will come in probably towards end of the year. As many people know, actually, the machine delivery nowadays due to the high demand actually takes some time as well. So immediately, actually, we plan this capex. This is a capex in the pipeline. So of course, we will observe the development of the economic and the demand and supply in the first and second quarter to determine second half investment.
Okay, thank you, Mr. Tan.
Yeah.
Yes, we have another question now. What is the impact of rising global commodity prices and electricity tariff in Malaysia?
Yeah, I think inflation is something that we cannot avoid. Every business faces the challenge of inflation. So we do the same. I think last year, we also experienced some increase in terms of our raw material, a few rounds of increase in raw material. We are able to pass on some of it to our consumable, I mean the end customer or distributor. Then in terms of other aspects, I think we have to improve internally, like I mentioned, the efficiency improvement. I think it's very important for us to embark on in order to maintain our high GP level. So moving forward, actually, like we explained to to a lot of investors throughout this period of time, we are able to pass down the increase in raw material, but the timing can be different because when we sell to our distributors, usually we will commit or we will agree with them on a certain period of pricing. So same likewise, we also try to match the increase in price or the things from our supplier. So this is how we manage our supply chain in terms of raw material and commodity during this inflation period. And as you can see, our inventory, if you notice, our inventory also increased last year. One of the reasons for the inventory increase, about over 2 million of our inventory increase, is mainly come from material. So because of the increase in price, so we try to bring in earlier some of the raw material last year. Yeah.
Okay, thank you. And another question in terms of your FY 2022 capex, is it possible for you to actually give us a gauge on the value of the capex?
The value of the capex,
Yes.
I think it's let me check. We have about 26 million unutilized IPO fund. I think it's sufficient for our this future this expansion, and the approved contract that we already confirmed is about close to 10 million, for this capex that we already issue our PO.
Hi, Casey. Edwin here again.
Yeah.
Just following up on your inventory increase. How many months of buffer does this translate to? And then secondly, can you give us a percentage increase in terms of capacity with your machines coming in? Thank you.
Machine coming in, as you can see, our capacity should be about 10% increase. And today our utilization is about ranging maybe 60 over to 70 over % kind of utilization. So we believe this 10% increase is enough for our this year expansion. Yeah.
Your inventory buffers, typically you keep 3 months, right? But
yeah, we usually keep 3 months. So due to the in order to prevent some delay in terms of shipment due to any interruption in terms of logistics, so we try to increase also the raw material level to 4 to 5 months time. 4 to 5 months. Am I answer your question, Edwin?
yeah, thanks.
Okay, thank you.
Maybe just one more last one. Given that you're increasing your capex, right? Capital allowances coming in, can you give us a tax rate guidance, since we've seen quite a volatile effective tax rates for the last 2 years?
Yeah, I think if you notice the final months, we experienced some benefit from the investment. Last year, throughout end of the year, we bring in another 2 machines. The final quarter, which is on the almost end of the year. That actually benefit us from some in terms of reinvestment allowance tax. So I believe our tax rate will be at more or less at this level. Maybe next year.
Okay, thank you.
Yeah. Any more questions?
If there are no further, oh, sorry.
Last one. In terms of your aerospace and automotive exposures, where are these located geographically? Is it mainly Malaysia?
Like I said already, the aerospace is not our main industry that we are the serving. We sell a little bit to Malaysia market, aerospace market.
Yeah, we have let me add, I can see we have some clients still in Western Europe, in France, UK.
All right, thank you.
Both in civil and military aircrafts.
Are there any other further questions? If not, I would like to conclude the session today. Thank you, Mr. Tan and Mr. Luciano, for today's presentation and the Q&A session. Please feel free to reach out to us at ImageJewel should you have any follow-up questions. On behalf of HPMT and Bursa Malaysia, I would like to thank everyone for joining us today. Stay safe. Bye.
Thank you, everyone. Bye.
Bye-bye.